Steve Thomas here with the Thomas Group and Real Broker, your local Las Vegas and Henderson realtors. Here today with Brenton, our mortgage partner here in Henderson and town that serves and represents all of our clients buying property in Las Vegas as well, to do a quick February mortgage update. So Brenton, very good morning to you.
Hey, good morning, Steve. How you doing?
I'm doing great. Thank you so much. Great to see you. I believe we've the last time that we spoke, at least on video, was when we did our mortgage predictions for January.
Definitely.
So we're going to cover today, you guys that are watching, quite a few really interesting things that have been happening in the real estate market, which of course like directly affects the mortgage market and the real estate market, right? They go hand in hand. So we're going to be discussing first and foremost how crazy busy the market has just got. For us, certainly in our group, we've been really surprised at how busy it's got, and want to see if Brenton has had the same experience. We're going to talk about whether our prediction of interest rates getting into the fives actually happened. We're going to talk a little bit about some inflation data, which is, directly correlated, you guys, to mortgage interest rates. And then we're going to give you a prediction on, what we think is going to be happening with interest rates, for the next 30 days. So Brenton, kicking off first and foremost, as I mentioned, we've been really busy with people calling us, ready to buy right now, people that are getting ready in the next couple of months. And this just seems like it's heated up really quick this year. And I know you've got many years experience in this industry. So I'm just wondering, first of all, has it been the same for you? And is this unseasonal?
Yeah, definitely. So November, December was a lot slower, right? So since the interest rates went up like crazy with the holidays, you always expect that we're a little bit slower those months. But yeah, exactly like you said. I mean, for our group over here, we're up about 30% already in January, as opposed to those other two where it's usually a slower increase. We're getting applications daily now. And I think it is due to mortgage rates coming down. Now, to touch on what you were saying as to, if we got in the fives. So we're in the fives now rate-wise for government loans, which are VA and FHA. Those are in the mid to high fives now. And that's with, no point buy downs, things like that. Those are just base rates.
Okay.
Right. So we can get in the low fives if we're getting seller concessions, things like that we've been seeing lately. Conventional with around, 740, 720 credits. We are, without charging the client anything, low sixes with the ability to get in the high fives to mid fives with seller concessions. Okay. So I think that's why we're seeing such an uptick in applications, is because we got through the worst of it. Through the September, losing, rates all the way up to 7.5. I think people are understanding that it's starting to trickle down and they want to get in before they miss out.
Yeah, no, definitely. And it's so strange. We saw it basically as soon as January 1st hit, the phone started ringing, and they're ringing multiple times every single day now, yeah. Right? And that, as you said, was not the case in December. Actually, we had one of our best months in December, which was very strange, but that was only because of previous months of properties that went into escrow. But in terms of people calling us, it died off, and now it's like it's really got busy. Like Kristen, as an example, she had some clients coming into town that were shopping for in the $2 to $4 million price range. She had a whole bunch of properties like lined up for them, and they'd organize them like 2 weeks ahead, and by the time they got into town, they'd all sold, they'd all gone under
Oh,
contract.
wow.
And that's not just in the luxury price range too. We're experiencing it in the $300,000 price range, in the $500,000 price range, in the $600,000 price range. I mean, every single price point right now in all of the different sections of real estate, single families, townhomes, condos, high rise as well. I mean, people are reaching out to us, interested about buying them right now. So I'm sharing this with the people that are watching because, I imagine a lot of people that are watching a video on mortgage interest rates are probably about to enter the market at some stage.
Definitely.
So, just from my perspective, and from what I'm seeing, I think that, and you and I actually spoke about this briefly over text, is we think that the buyer's market might be gone in 3 months.
Yeah, I couldn't agree more. And obviously just my opinion, but I personally think that buying a house before April is going to probably be the best time. I mean, you can't time the real estate market, and we're not really trying to, right? But I think that is the best time to buy if you are especially a first-time buyer, because we're getting houses a little undervalued. Rates are coming down. They're not where we want yet, but to get into the house with seller concessions and then refinancing, later down this year when we're expecting rates to be a lot less, I just think that that's the only time where you're really going to get into a house cheaper, as I do think those are going to go away here soon as rates come down.
I 100% agree with you. And this is not just us telling you to go buy a house because we want, get your business and stuff like that. I mean, like you use us or not, but use this as a prediction and a forecast, because we are boots on the ground. We're experiencing this, unlike the media is, right? The media has always got a narrative that they want to try and sell. But just from what we're experiencing, it's going to be really, really, really busy this year. And I have been very, very hesitant in the last few months in telling my clients to, buy now and refinance later, just because the uncertainty was there. And I don't want to ever put someone in a position where they ultimately can't afford to, their house. But I think that with everything that's going on and this PCE data that was just recently released, everything's going in the right direction. So if you're a buyer right now that's like waiting, for a big market correction to happen, well, it's happened, right? We've dropped 20%. Now it's going to be your chance to capitalize on that bottom, because I think that now, in the next few months, the needle's starting moving up. All of the indicators are pointing upwards, and the mortgage rates are going down, right? So this is going to be starting putting more upwards price pressure on the market. And it's not. I don't think it's going to be crazy like it was, when rates were at 3% and stuff, which is great. Like, that's not good market, but
we don't want that.
Oh no, nobody wants that.
Nobody
right?
wants
That's not healthy at all. But I think we're about to enter an extremely healthy market. If you're on the fence right now, like, this is the time to still get seller concessions, and to really get some good deals, because come the spring and in the summer, it's going to be really, really difficult again. Because tell us a little bit about that PCE data, Brenton, and why that's important.
Yeah, so the PCE data is realistically, it's just the Fed's favorite measure of inflation. So what they do is they take out basically like the food and stuff like that out of the inflation numbers, and they strictly just look at it from the inflation standpoint. So it dropped 0.3%, which is right on par with what they thought that it was going to drop. So obviously, with inflation going down, mortgage rates come down with it. So where we're at as far as mortgage rates right now is it's kind of a little weird time, because this week we have a lot of items coming out. So tomorrow there's appreciation readings with the real estate market, which is from the Case-Shiller, which is like the You know, that's basically the basis of everything as far as the Fed. And then Wednesday, they're discussing the Fed statement and their press conference. So on Wednesday, they might raise rates 25 basis points, which is very drastic from the 75 and the 50 that they have been raising them over the last 6 months. Mm-hmm. Now, when that statement comes out on Wednesday, the big thing is what kind of press conference that they release. You know, like, is inflation really coming down and things of that nature? So Wednesday is going to be a really big day for us. And then the only other date that I would like to say is that everything is gearing up for a May 10th significant drop in rates. And what I mean by gearing up, it's the 10-year treasuries, the notes, appreciation, everything like that is gearing up for that date, according to all the mortgage-backed securities and everything that I follow. So I do think that's part of the reason why I think that getting into a house now is probably the best time, because coming in May, I think that we're going to see a significant decrease. And I can't imagine that people don't jump on the market as soon as possible once they see rates in the 4s or 5s as opposed to 7s like they were for so long.
Mm-hmm. Yeah, that's really interesting. So, you know, I think the market, just from what I'm experiencing, has got a huge amount of demand already, right, built up, and we know that there is, you know, there's a supply demand issue here, right, and there will continue to be until more properties are built and stuff. But what I'm hearing from this is the demand is already there right now. In January and in February, it's going to start building and building, and then in May, that thing, all of this data that's about to be released that you're talking about, and these reports, is going to end up acting as a catalyst to, like, propel everything forward again.
Yeah, so, like, for example, I mean, when you're taking out clients right now, I know we have a couple with you, like, there is homes in the $300,000 and $400,000 range. Mm-hmm. There are some homes available. And, you know, hedge funds already announced that they're re-releasing and getting into the real estate market. I just genuinely think, and that's why I geared it towards first-time buyers, I really do think that we're going to have some trouble for first-time buyers in, like, that 3 to 450 price range after May. And I'm encouraging everybody, if you're getting your tax returns, your refund back, like, whatever you can do to get in now, I genuinely think it's going to be extremely beneficial for people to get in sooner than later, because I just don't know if they're going to be able to later.
Yeah, that's very interesting. And it's, you know, it's all predicated around two things, right? Interest rates and inventory. And I guess, if, you know, come in April, May, springtime, if you know, inventory levels remain the same, I agree with you. I think it's going to be very difficult. I mean, when I say remain the same, not the same as they are now, obviously they're going to increase, but the same as they historically kind of are.
Yeah.
Because I just don't see any reason why there's going to be a huge amount of properties, you know, listed than there is normally. I mean, maybe there's a little bit more, there's been a little bit more reluctance in the market for people to sell, just because they know that they need to then buy a place elsewhere. The rates are so high, so they hold on to their house. But again, I think the demand is gonna balance that out. So I guess, you know, we'll see. No one's got a crystal ball, but I think we've definitely been correct in forecasting a lot of things, right? You said they're going to hit the 5s, the FHA and VA loans have, conventional still, you know, a little bit above that. But forecasting for the next 30 days, Brenton, what does that look like?
So I think this Fed report's going to be really huge. Now, if they come back and they're like, hey, we're doing a great job, we're not hitting it as hard as we need to, everything's kind of balancing itself out, I think that we're just going to be 5s on everything. High 5s conventional, low 5s FHA and VA. And that's with the ability with buy downs to get you in the 4s, right? And it's like you said, right? So people have been holding on to their properties because they don't want to go and buy something else. So that's what I'm seeing the most of, is that people are now like, okay, it's almost worth it to cash in on this equity that I received, because I'm going from a 3 to a 5, right? Not a 3 to a 7.
Mm-hmm.
So they're, risk reward. They're like, man, I got a ton of equity in my house because I bought an 18 or 19 or whatever it may be. So those are the applications that I'm receiving the most, is a lot of people like, I think it's time to cash in and go get something else because we bought at such a good time previously. Yeah. And that's what I'm encouraging to do too, because if you can get a house under value now, it's going to be just like 18 and 19 was. If you give it a couple years, I think, there might not be a house for sale for 400 grand in a couple years. Who knows?
Wow. All right, awesome. Well, very exciting. Ladies, gentlemen, if you need a great loan officer in town, Brenton is absolutely your guy. He handles majority of the business for all of our clients, and you can check out their reviews online. They're not called 5-star mortgage just because they don't get less than 5 stars in their reviews. They get great reviews, but more importantly, guys, they have phenomenal rates. And actually, I want to end on this, Brenton. I just want to say thank you to you and John for recently helping one of our clients out in you beating a very well-known big lender here in town by $5,000 out of pocket in their closing costs.
So of course,
this is why we recommend everybody shops around, like do your due diligence, see who is going to give you the best rates, but highly recommend Brenton and John over at 5-Star Mortgage. And we'll put all of their information on the screen. So if you're thinking about entering the market right now, make sure you give them a call. They'll clue you in on the best, strategies and options for you right now. And then once you're pre-approved, call us and we'll help you buy the house. So thank you so much.
Thank you,
Brenton. Yeah. Thank you for joining us. Absolute pleasure. And we'll see you in March, looking back at February.
Perfect. I look forward to it. Thanks, Steve.
Excellent. Thanks, everyone. Take care.